Santelli is standing by at the CME in Chicago. Rick, we're a little bit early, but, it's interesting the moves that we've seen in the yield curve. We saw the 10-year reach as low as 4.03% yesterday. I know you're watching that. We're seeing a whole shift lower in the curve.
Yes, we are. And what's fascinating is it hasn't really inverted significantly considering how bullish prices have pushed down yields. We're at minus 23. Our best close so far in the cycle was minus 14. So we've given up about 8 basis points with respect to the market watching rates go down. So bear market, bull market, we see that the yield curve is being pressured. Here we go. Non-product productivity, second quarter preliminary, up 2.3%, well above the under 2% expected, and it really is significantly stronger than the last quarter. The first quarter was 1 year since we had such weak productivity, up 0.2. You had to go back to Q4 of 23. Now, let's look at what's going on with unit labor costs. Much lower than expected. We were looking for a number around 1.8, comes in half that. Up 0.9, up 0.9. Now, 0.9 is the lowest going back to the last quarter of last year as well. So minus 2.8 was Q4 of 23. That was the biggest negative, the biggest drop going all the way back to Q3 of 2020. So this is a pretty good number. Now, we do see some subtle revisions, but nothing huge. Productivity on the first quarter final moves from 0.2 to up 0.4, so almost half 1%. And unit labor costs move down 0.2 from 4% to 3.8. Now let's look at claims, shall we? On initial claims, 249,000. That's up 14,000 from at least up to this point, unrevised 235,000. 249,000 would be the hottest number going all the way back to August of 23 when we were at 258,000. Continuing claims, well, let's see. We now have 1, 2, 3, 4, 5, 6, 7, the 8th consecutive week above 1.8 million. 1,877,000 to be exact, follows a slightly revised 1,844,000. 1,877,000 would be the highest level going back to November of 21. So we see once again that we are under pressure with regard to continuing claims moving higher. We see that initial claims, even though a little bit better behaved, is now starting to hover around that 250,000, just below it. That is psychologically significant. And we see productivity. Now, these levels are pretty good, but I do want to put one thing out there real quick. If you do look at productivity, what you would like to do is compare it to pre-COVID. So here we are up 2.3 in our second quarter preliminary. If you look at the second quarter of 2019, it was 2.6. If you look at the last quarter of 2019, it was 3.6. So we see we're kind of getting back in that range. 2019 was a good year for productivity. Interest rates continue to move down, Melissa Lee. We're here now at 4.02 and a 10. We see that the pre-opening equities have firmed up a bit, and we want to pay close attention to that psychological level at 4%. I personally didn't think that we would spend much time under 4%. I will stick with that, but there is a real tailwind based on the seeding of cuts by the Federal Reserve and yesterday's testimony by the chairman. Didn't come out and say it, but he certainly did, as Tyler Mathisen said, tee up the ball for cuts at the next meeting.